Cold open. The SEC canceled crypto day. Bitcoin did not cancel 21 million. That is the whole receipt. The Securities and Exchange Commission had an open meeting on the calendar for August 14th, 2026. The agenda said regulation crypto assets. The matter was whether to propose new rules for a tailored offering regime for certain investment contracts involving crypto assets. Then the meeting page changed to one word: canceled. That does not mean regulation is dead. It does not mean the SEC hates Bitcoin. It does not prove conspiracy. But it does give us a clean comparison. Crypto law depends on meetings, calendars, agencies, exemptions, comments, politics, and jurisdiction. Bitcoin's supply rule does not. This is the Weekly Rebuttal. Steelman first. Legal clarity matters. If you are an exchange, an issuer, a custodian, a broker, a startup, or a public company trying to touch digital assets, you do not want to build inside a fog machine. You want to know which activity is securities law, which activity is commodities law, what disclosures are required, what custody rules apply, how fundraising can work, what investors must receive, and which regulator owns the lane. That is not a small thing. Bad law can push activity offshore. Unclear law can reward bigger incumbents who can afford lawyers. Good rules can reduce scams, improve disclosures, and let serious builders operate without guessing whether the referee changes the field after the play. So when the SEC schedules a crypto rulemaking meeting, people pay attention. They should. And when the meeting is canceled, people get frustrated. They should. Markets like clarity. Businesses need clarity. Investors deserve clarity. That is the strongest pro-regulation case. Now the rebuttal. Do not confuse legal clarity around crypto businesses with monetary clarity inside Bitcoin. Those are not the same category. The SEC can clarify how a token offering is treated. It can clarify disclosures. It can clarify exemptions. It can clarify investment contracts. It can clarify which fundraising path a crypto startup may use. That matters. But none of that is what makes Bitcoin Bitcoin. Bitcoin's core monetary rule is not waiting for a commission vote. It is not waiting for a Sunshine Act notice. It is not waiting for a meeting room at 100 F Street. It is not waiting for the Senate calendar. It is not waiting for a chair, a commissioner, a comment period, a lobbyist, or a safe harbor. Bitcoin's 21 million rule lives in software that users can verify. Full nodes enforce the consensus rules. If a miner produces a block that creates more Bitcoin than the rules allow, honest nodes reject it. That does not make Bitcoin politically effortless. People still argue about policy. People still argue about software. People still argue about fees, filters, spam, upgrades, custody, privacy, and culture. Bitcoin has humans around it. The point is narrower and stronger. The supply rule is not an agency product. This is why the cancellation is such a good receipt. The crypto industry looked at a government calendar because much of crypto is built around issuers, companies, products, disclosures, intermediaries, tokens, and fundraising structures. Those things live in the legal system. They need lawyers, they need regulators, they need definitions, they need permissions, they need documents. Bitcoin can touch that world through exchanges, ETFs, custodians, treasury companies, and tax rules. But Bitcoin itself is not a fundraising exemption. Bitcoin is not a startup asking permission to sell a token. Bitcoin is not a CEO promising a roadmap. Bitcoin is not a company waiting to find out whether its investment contract can be offered under a tailored regime. That is why Bitcoiners sound annoying when they separate Bitcoin from crypto. Sometimes the tone is bad. Sometimes the purity test gets lazy. Sometimes Bitcoin not crypto becomes a slogan people repeat instead of an argument they can explain. But the distinction is real. Crypto law can change what companies are allowed to do. Bitcoin's supply rule changes only if the network accepts different rules. That is a completely different form of power. One system says the agency meeting is canceled, so the rulemaking waits. The other says the meeting is canceled and the nodes keep validating. That does not mean ignore law. It means rank the layers correctly. If you hold Bitcoin through an exchange, legal rules matter. If you use a custodian, legal rules matter. If you buy an ETF, legal rules matter. If you invest in a Bitcoin treasury company, corporate rules matter. If you use Bitcoin as Bitcoin, the base layer rule still has to be verified by the network. That is the distinction. Legal clarity is useful. Monetary clarity is different. The SEC can help clean up the issuer economy. Congress can define regulatory lanes, courts can interpret investment contracts, but none of them are the source of 21 million, and that is why the cancellation makes such a strong frame. The meeting can disappear from the calendar. The supply cap does not. Crypto may need an agency meeting. Bitcoin needs nodes that say no. Educational only, not financial, legal, tax, security, privacy, or investment advice. This is exit velocity. Think in Bitcoin.